In November 2013, DEFRA published its response to the consultation on Flood Re. Subject to a memorandum of understanding between the Association of British Insurers and the government, the Flood Re proposal for now has put to bed any fears that domestic policyholders would either be denied cover or offered prohibitively expensive insurance on the open market. Now, there are still some things to be ironed out, but for now, most of the insurance industry is pleased with the progress.
The original agreement between the ABI and the government, known as the Statement of Principles, dates back to 2000. However, this expired in July 2013.
We've made a lot of progress on Flood Re over the last year. It was a big step to sign a memorandum of understanding with the government in June this year, accompanied by a very good outcome in the spending review, which increased capital spending on flood defences, which was a big win for the industry. And since then, we've made good progress on the implementation project, or at least the initial stages of the implementation project. And yeah, we still hope to see Flood Re delivered by the middle of summer 2015. So that's the best we can hope for, really.
Well, I think it was really important that we did find a replacement for Statement of Principles. I think it's very clear, reputationally, the industry did need to find a solution that worked for it and the government. And so it's been challenging. We've been going at it for quite a long time. But I think we're there, and I think we're trying to iron out the last bits of detail now. But I think we do have an agreement that works for us, and clearly there's a lot of political incentive to get that done. But equally, I think for the industry, it's important we do deliver on it.
Flood Re will provide a fund to offer people at high flood risk who might otherwise struggle to get affordable flood insurance cover at a set price. Insurers will put into the fund those high flood risk homes they feel unable to insure themselves, with the premium to cover the flood risk part of the household premium capped. The cap will be based on council tax bands starting at no more than £210 per annum in bands A and B, rising to £540 per annum in band G. The cap premiums will go into the fund to help pay flood claims, so if you are at flood risk, you know that the cost of your flood insurance will be limited. To help fund this, all home insurers will collectively be subject to a levy. On average, it is estimated this will work out at £10.50 a year on all house insurance policies. The ABI argues homeowners already pay this, as some cross-subsidy has always existed between lower and higher flood risks. However, the British Insurance Brokers Association believe the scope of Flood Re is not wide enough.
Well, the existing Statement of Principles does cover small businesses up to 49 staff. So, of course, you've got millions of businesses there which have that peace of mind, which have had that comfort blanket, and now they're not going to have that anymore. So our members are very concerned about that. It's not always easy to find a solution. So we want to get a compromise, a good balance, and we think that small businesses with less than 10 staff, with less than £1 million turnover, micro businesses, would be a good way to do that. So if there's a row of terrace houses and there's a B&B in the middle of that, the people live there, they reside there, they're exactly the same type of property as either side of them. Surely they should be afforded the same protections from Flood Re, and obviously they'd pay their own contribution towards it as well. So we think that would be a good compromise to help small businesses.
The ABI has worked closely with the government on the various exclusions. We've had a working group of members who've looked at the underwriting scope of Flood Re in an awful lot of detail. We don't think that there is a real case for SMEs, small businesses, to be included within Flood Re. The government has run a consultation exercise over the summer, which itself showed that there's pretty limited evidence of a widespread problem for small businesses in terms of accessing flood insurance. Even if there was, to be honest, Flood Re probably wouldn't be the answer for those, simply because of the scale of the problem. Flood Re is a complex, expensive operation, and the scale of the problem for SMEs just isn't big enough to legitimise that kind of approach.
The discussion over the scope of Flood Re does not end at the type of properties that are in or out, but also whether new builds should be included.
Well, the brokers have said they want 2013 to be the cut-off, because that's when everything starts from here. So because of moral hazard, we understand that from now onwards, that's what we want to be in place. But when we look back to 2009, we've had policy planning statement 25 in place anyway, so there shouldn't be too many problems since then. And we've had some MPs saying, they've got developments in progress that they want some help with. So 2013 is where we'd ideally like to see it.
One of the emotional things is clearly which properties are in and out, and in designing Flood Re, I think there was a real desire not to go further than the original Statement of Principles. 2009 was a point in the last renegotiation of the Statement of Principles, because that's really when the planning permissions should have prevented high-risk flood properties being exposed. And I think it's really important that we don't take a retrograde step back from that. if planning allowed properties to be developed that were at very high risk, then I don't think Flood Re should cover them. I don't think anybody's saying that's an issue, but clearly, we need to manage the scope of properties that are captured in Flood Re, and 2009 seems very sensible.
Another key issue that has come out of the consultation is the management of flood risk, and whether Flood Re may ultimately disincentivise homeowners from reducing their own exposure.
It's very important that we continue to manage flood risk in the UK. Managing flood risk is the best way, the most effective way of making sure that flood insurance is available and affordable in the long term. And we absolutely don't want Flood Re to disincentivise the management of flood risk, be that by government, be that by local government, or be that by individuals. And there will be controls built into the process to try and make sure those incentives are maintained. We've already seen that government, as part of the negotiation process, has committed to improve the management of flood risk at a centralised central government level. From an individual perspective, it's a bit more difficult because obviously different approaches are appropriate in different contexts. Some home it's appropriate to take a lot of action, others taking action might not have much of an impact on claims cost. So it needs to be a bit more of a nuanced approach at the localised level, but we want to build that kind of stuff in, yes.
For insurers, there are technologies available to help them manage their own portfolios, and there continues to be widespread industry discussion about how better data and the better use of data could help with the management of flood risk. However, some of the 149 respondents who took part in the Flood Re consultation are worried about the perceived inaccuracy of current flood maps. Ordnance Survey is alive to these fears, but also the opportunities, as its Financial Services Business Development Manager Richard Brocklebank explains.
A number of insurers have been using sophisticated tools and Ordnance Survey data for property level risk assessment for more than 10 years now. When moving to property level rating, insurers have on average established 25% more properties are not at risk of flooding than were previously thought to be at risk. And by taking account of a building outline within a property boundary, insurers have established an even more accurate view of that risk. As the National Mapping Authority, we capture on average 10,000 changes every day to the built environment in Great Britain, and on some days it's more than 20,000, which just highlights the scale of changes happening and the likely increases as the economy picks up. Newly released surface water flood models and regularly maintained river and coastal flood models, underpinned by accurate mapping data, will allow insurers to make informed decisions for underwriting and pricing flood risk, and ultimately a decision to place a property into Flood Re. With flooding a continual problem for the industry and the householder, whether surface water, river or coastal, using accurate maintained data is vital for Flood Re decisions and for the customer's need for affordable flood cover.
Just because Flood Re is created, I think the incentives for insurance companies to understand the flood risk, so investing in mapping, investing in data, is still true. I mean, Flood Re doesn't change our need to understand risk, to price a risk effectively. And actually, in many ways, whether you put properties into Flood Re or whether you hold them on your own account, that's just as important, indeed, if not more so. So I think investments in data, investment in risk management still remain true. Flood Re is absolutely there as a vehicle, but whether you seed properties into it or not is a choice that individual insurers will make, and certainly a business like ours with our scale, we see huge advantage to investing in data. We'll carry on doing that irrespective of whether Flood Re is there or not.
It is proposed that the Flood Re measures will be taken forward in the Water Bill that was put before Parliament in June 2013. You can guarantee that the 5.8 million property owners that are at risk of some form of flooding, as well as the insurance industry, will be watching its progress with some interest.